Alrighty, guys, what is going up here today? We're going to be starting the podcast little segment here on YouTube. So let's wait for people to get in. You guys can ask me questions. We're going to be going over this PowerPoint here. Introduction to Day Trading Lesson number 1. This is going to be a little segment that we're going to do maybe once a week or, whatever you guys think that we should do, because I really want to start getting into my podcasting more and everything like that. But I need your guys' help. Really, what we're going to be doing is helping you guys. You guys can ask me questions. We were going to be doing, everything from debates to, interviews to educational videos and everything like that. So, on top of that, we're going to be giving away some courses and everything like that. Let's make sure everything is, running smooth. It looks like we are good to go here today. So, no big deal if you guys missed this video and you guys want to just come back and check it out. It's no problem. This is the first one that we're doing. We're going to be putting this on Apple Podcasts, Spotify, YouTube, everything like that. So wherever you're listening to from, get ready for more videos and everything like that here today. But all right, so that's pretty much jump into it. And if you guys have any questions or anything like that, just ask me in the chat room. You guys can either ask me in the chat room or you can just ask me wherever you guys want. It's no big deal at all. And I hope the audio sounds good, because I know in the past when we've done live streams, we've had some issues picking up the audio. It looks like it's going, but yeah, so let's just jump into it here right now. So we're going to be doing Introduction to Day Trading here, lesson number 1. Like I'm saying, we're going to be doing a lot more of these videos. All right, so let's just jump into it. So really, how does day trading work? And you might be saying, well, Carter, it's like 9:30 or 9:45. Why aren't you trading? Well, today, I really am not trading. I'm not trading today. I wanted to make this video for you guys. I got a lot of work other than this to get done today. And I just want to take a day off. It's no big deal to take a day off and relax. So that's what we're going to be doing. But how does day trading work? So day trading is very easy to understand, but a lot of people think it's a lot harder than it is. So day trading is when you buy a stock in hopes it's going up. So when you hope it go up, when you have hopes that it's going to go up, you are considered a long bias trader, or you're a buyer. And when you want the stock to go down, that means you're a short seller or a seller in the market. Now, these types of traders really, they're similar but different, as you can tell. Each strategy is different. A lot of people love to short volatile stocks. And really, I see that, and I've done it. And there's a lot of good money to be made. But what tends to happen for me is I'll get in on the short side and the stock will turn around, get volume, and then squeeze up. And I'll get stuck out of my position. And it's just not the best. So really, I am a long bias trader. I trade the gap and go. I trade red to greens, moving average lines, everything like that. So as day traders, we profit when the markets are moving. So really what that means is on a slow day, like when the stocks are only, when there's only a couple of stocks that are even moving or going up maybe 12, 13%, there's nothing to be made. We like to get stocks that are going up, 40, and then we want to try to get that percentage to go from 40 to maybe 45 to maybe 50. So we're trying to scalp these big winners when they're squeezing up, or people who got in on the short side have to start, selling their positions back to the brokers, and that will cause a really big squeeze all the way back up. So it's our job to find stocks that are moving. We're hunters of volume and catalysts. So you might be saying, well, Carter, I know what volume is. Volume is when, people are in the market and, people are buying and selling stocks. And you're absolutely correct. You are. But what's a catalyst? Now, a catalyst could be really anything that's going on with the stock. Now, what tends to happen is there'll be some sort of news, there'll be some sort of earnings report, press release, FDA approval, anything like that. Anything that gets attention from investors and other traders is really what we're looking for. We can't just go on and just trade any old stock. We want stocks that pretty much everybody is trading, and that's why we look for stocks with catalyst. So let's just continue to move on here. Day traders who fail. So day trading requires practice and education. I cannot stress that enough. You will fail if you go into the stock market and you think you know what's going on, you've never practiced, and you don't really understand a lot. I will guarantee it 100% of the time you're going to lose money. So this is why I require, a lot of my students to really, paper trade from anywhere from 6 months to a year. The reason why I say that is because you have to look at it like this. You can't read a book on heart surgery and the next day perform the surgery. You just can't. That's not how the real world works. And if you're going to be treating this, day trading as a job or a business, it's going to take time. It's going to take education. It's going to take practice. You can't do it. I cannot stress it enough, guys. You're going to have to put in some work if you want to make money, because a lot of people think stock market's one of the best ways to build wealth, and that is 100% right. It's 100% right, and you need to just paper trade. I cannot stress it enough. You cannot become profitable if you don't know how to do this. Paper trade. So really, it's super important, guys. Really, if I were you guys, I would pick up a couple of these books. I got a couple of books up here. I got my book down here. I would pick up a book and just start learning about it if you want to get your feet wet. Open up a broker account like TD Ameritrade and start getting your feet wet trading. Now, the reason why I say open it up with TD Ameritrade is because they offer a free real-time paper trading account, and that's super uncommon to see, and a lot of other brokers will charge you money and they're free, so obviously go with them. So the next thing here, many new traders can't make fast decisions and don't have the mental strength to handle the stress that requires with trading. So day trading is pretty much 80% emotion and 20% education and practice. I cannot stress that enough. Same thing about before. You're going to be put on the ropes every single day with everything, guys. All right, so we have a question here. How long do you have to be profitable in paper trading before you can go live? Now, what I recommend is pretty much doing 6 months on profitable trading. Now, the reason why I say that is because really when you begin trading, there could be different types of markets. We could be in a bull market and stocks could be just roaring up. Everybody could be making money. But once you start getting into 6 months, 6 months, then you're going to be going over different type of market environments. So the strategy that you use on your paper trading account will see everything. We want that, that strategy to see slow markets, bull markets, bear markets, everything. So if you're overall profitable, then you're going to be overall profitable once you open up an account. Hope that makes sense, but that's very important. Good question there. But all right, so let's just continue to move on. All right, stock selection. So as traders, we are hunters of volume. And really what that means, guys, is we want to be where everyone's at. Now, the reason why that is because imagine this. Imagine if we just pull up a random stock and we just buy it. Now, that stock's not going to have the potential to rip up or to squeeze or do anything like that. Now, if there's other people buying that stock's going to get momentum and it's going to start coming up. It's very simple. So you got to, once you pull up the charts on the bottom, there will have these little lines that will be like this. That is the volume. It's just right along the bottom. And, we want that to be above average, because if it's just any old day, you're going to lose your money and you're going to be very upset. So really what we search for is low floats. At least that's my strategy. Some people trade, high float and everything like that, or, blue chip stocks. But the reason why I don't trade those is because two things. Now, the first thing being, imagine we're trading Ford. Ford has a float of like something in the billions. So meaning they offer billions of shares, multi-billions of shares. Now, imagine that stock gets, 30 million shares traded. So you're thinking, oh my God, this stock has so many people watching it. This thing's going to roar to the moon. Now, that's just any old day with Ford, because there's so many people buying that stock, and it doesn't really create the demand that it will need to squeeze up. So, it's super important there, though, guys. So as compared to a low float, imagine if there's a float of, 10 million shares. Now there's 5 million buyers. That stock is going to rip up once these people start getting that volume. That's why we're hunters of volume, and we search for low float stocks that have a catalyst. So I use simple day trading strategies to minimize risk and maximize profits. Now, I know so many people out there say this. They say they minimize risk and they maximize profits. But how do you do that? Now, it's super simple. It's very simple. Cutting your losses early and pretty much riding your winners. Now, the reason why I say that is because there's traders out there that will, when that stock dips down and it's at your your stop loss, they'll buy more because they want to average down their position, and that stock's going to break that support and it's going to fall all the way down. And when that happens, you're going to be losing a ton of cash, and you're going to be, your account's going to suffer big time. So what I always do, I like to just set in a mental stop and say, when this stock hits, if that's, say I buy the stock at $1, I set a stop at 95 cents. It's a little large, but once it goes down maybe 3 or 4 cents, I get out of it. And then once it peaks to the 5 cents, I make sure I sell everything. But once that stock starts going up, I keep moving my stop loss up with the stock. I don't leave it all the way down there, because once I'm already up, I want to make sure I'm up to at least the break even point. And if that stock dips down, I get out, no harm, no big deal. So an intro to my strategy. All right. So I trade stocks that are moving up pre-market more than 4%. Now, the reason why that is because 4% is a good overall number when it comes to, when it comes to those catalysts that we always talk about. A lot of people love them, and it's very, very important. So stocks that are maintaining their pre-market highs. We don't want a stock that went up 40% at 8 a.m. and then when 9:30 comes around, the stock's up 4%. We don't want that, because that's going to have some sort of sell-off, and it's just not going to be good. We want a stock that's, maintaining its pre-market highs. Yeah, it can be a little low, it can be a little above it, but overall in that same little zone there. Stocks that are above the 290-day moving average lines. Now, the reason why I have this here is because now when a stock is above these have a higher percent of, actually squeezing up, because these 290-day moving average lines, they act as support or resistance lines. And since the stock is going to be above them, they're going to be using them as support. And if the moving average lines were above the stock price, then those are going to be resistance lines. So it's super simple. Setting my stop losses around 2 or 3%. Always get out in this zone. Never at 7, 8, 9%. That is one way to blow up your account. Even if you're down on the day, even if you're up on the day, if a stock is going to hit my stop loss, I am making sure I'm selling that position, because I don't want to hold this stock into tomorrow, because that's not a day trade, and 90% of the time those stocks are going to sell off. But what's my edge? So as traders, we have to have an edge in the stock market. We do, or we will lose money. I can guarantee you that. So what's my edge? I'm looking for low float stocks with high relative volume. So really, guys, this is my edge. I'll put that in the chat here for you guys, just so you guys can have it there. But all right, so the reason why I like to have relative volume here, high relative volume. Relative volume is pretty much just the overall demand for the stock, guys. Overall demand when the stock's moving good and people are wanting to buy it. It's very simple to put in a scanner for that. It's not too hard, especially on Trade Ideas. Links will be down below. I got to get my coffee, guys. I am tired, thirsty, and I woke up very early today and went to bed at like 3:30 a.m. But yeah, so okay. Japanese candlesticks. So these right here are the candlesticks. If you're listening to this on the podcast, or on Apple Podcast, you guys can't see it, so I recommend going to Carter Farr on YouTube and pulling this up here, or you guys can just look up Japanese candlesticks. I'm sure you guys know if you guys are interested in trading. They're the candlesticks that you guys can see when you guys are looking at charts. They offer 4 pieces of information. They offer the open price, boom, right here. They offer the close. The close is right here, boom. They offer the highs and the lows. So they offer 4 pieces of information. The shape of certain candlesticks in a row can help give a more predictable future, because if everybody's looking for these patterns or everything like that, the follow through will be very good. So who am I? I don't trade fundamentals. Fundamentals are looking at actually earnings reports and seeing, okay, this stock made $9 billion this quarter, and as compared to last quarter, it made $4 billion. So we're gonna short the stock, buy the stock, anything like that. I don't trade any other markets, forex, crypto, or just the reason why I do that is because I like to think of these as, imagine if you are a doctor, like we're continuing off the heart surgery. Imagine if you're a doctor, you just learned how to do a heart surgery. Now, let's say you want to learn how to do brain surgery. Now, the heart is the stock market, the brain is these other two. So you got to learn a completely new strategy, and I tend to stay away from it. It's up to you, though. I'm not saying to do it. I don't care where the company is in a week. We make fast trades. We get in and out of stocks within, maybe seconds, 2 minutes, maybe to an hour or so. We get in and out of trades. We don't care where the company is going to be in the future. We really don't. We hope everything goes well, but at the end of the day, we sell our positions and we're good to go for the following trading day. I don't buy a stock because others told me to. When I first started trading, I fell in this hard. I signed up for, signals and everything like that, and it was terrible. I was pretty much buying when they were selling the position, and it was not very good. So I like to think of this as trade it because you understand what's going on and you can make money from it, not because I told you to or anyone else told you to. Day in the life. So what's an actually day in the life of a trader? So you're doing pre-market scanning from anywhere from 8:45 to 8:30 to 9 o'clock pretty much. You're creating a watch list of 4 stocks for that trading day. So these are going to be stocks that you guys see some sort of potential, some sort of value in, and most of these times they're going to be stocks with catalyst, low float, high relative volume, everything like that. From 9:30 to 10:45, taking trades. Around 11 o'clock, the volume tends to leave the market. It's always been like that. It's always been like that. But from 12 p.m., you're most likely done trading, unless you do like maybe some swing trades or something like that. From 1 p.m. to 3:45, you're doing trade recaps and you're following up with other traders to see what they've done. That's why I highly recommend having some sort of community chat room, just because most of the time you're by yourself and it gets kind of lonely, to be honest. So you need some people to talk to. It's just from 4 p.m. to close 4 p.m. close all my positions for that trading day, and I repeat it tomorrow. Most of the time I'm actually up at 6 to 7 a.m. I go to the gym. Home by 8:15, take a shower, 8:30. Then I have like a breakfast while I'm scanning, and then by the time 9:30 comes around, I'm ready to trade. All right, so commit to one strategy. So the first step in becoming a profitable trader is to remove all of the noise, opinions, and confusion from your trading style or strategy. If you have, let's say 10 strategies and 10% of them. That's good. That's good. But imagine if you knew one strategy and you knew it 100%. You knew everything, when to buy, when to sell, when to exit your positions, when to do everything, do it all. It would be a lot simple and it would be a lot less confusing. Now, me personally, I've been trading full time for, this will be my third year actually going into November. This will be my third year. And it's something that I only use really 1, 2, 3 strategies. I use 3. And, the reason why I haven't, they're all very, very, very similar. But if that's, say, it's a slower day, then I use something along those lines. If it's a very aggressive day and I'm trying to get up on the month or, everything like that, then I'm using a little more aggressive strategy. You just got to find something that works for yourself and kind of adjust it to the market condition. Homework. So the homework. Now, the reason why I do have homework up here is because all of those things I've talked about, you're going to have to do. You're going to have to study. Now, studying super important. That could be anything from, researching patterns to reading a book to listening to this podcast. You guys don't realize it. You're not realizing this, but when you're listening to this podcast, you're actually having some sort of education in it. It's pretty cool. But that is it, though, for this podcast. I hope you guys enjoyed it. If you guys are listening to it on YouTube or anything like that, shoot me a question if you guys have any, or just go in the chat room and you guys can send me them there. I don't know if I have the link for the chat room actually right here. Let me see if I can get it and throw it in there for you guys. It should be down below. I think it will be down below, guys. I think so. I can't really see for some reason. But I'll make sure next time that I have it. Let me see. Oh, here it goes. Okay. Podcast. Can't really tell. But, yeah, so that is it, though. I don't know, guys. I don't know. I can't seem to find it, but I'll make sure you guys get it next time. Remember to always stay happy, stay positive. I'll see you guys tomorrow on another episode. I hope you guys have a great rest of your week. Maybe we'll start doing these. What day is today? Today is Wednesday. So maybe we'll start doing these like Wednesday morning, educational videos. So, if you guys want me to do that, put a comment, put a like on this video. Remember to always stay happy, stay positive. I hope you guys have a great rest of your week. Take care. Take care. I don't know.